everybody. It's Brian Shannon from AlphaTrends.net, and today is Friday, the 27th of January, 2017. We had a positive week for equities here. The banking index in particular up 3%, semiconductors up close to 3% as well, and the Russell 2000 is starting to show that it's got some ability here to run after its recent consolidation. So let's take a look at the market and see where we are. We've been talking about the S&P 500 being in this range here for the last really better part of the month, and that because we had a rising 50-day moving average, I was continuing to give the benefit of the doubt to the buyers and expecting that the eventual break of that range would come to the upside, which in fact it did this week. So when we look at the longer term picture, obviously we're up at all-time highs. There's nothing bearish about all-time highs. What we want to do, of course, from here is see that the market continues this uptrend and it is innocent till proven guilty. What we'll be looking for is prior areas of resistance to act as support on pullbacks. We have this rising 5-day moving average. We are also above the year-to-date volume-weighted average price. In the last 2 days, we've seen just a little bit of pullback here, but still in a very healthy uptrend overall, and it should be expected the S&P 500 should be able to continue to move higher, especially when you look at the lighter volume on the consolidation the last 2 days. Real quickly, I wanted to make mention also that there's only 1 week left for Alpha Trends annual subscription sale where you can save significantly. I won't go through all the details, but you can find that at alphatrends.net. And tomorrow I'll be participating in a 2-day charting event called the Chart Summit. You can find that at alphatrends.net in the post that goes along with this video. I'll be presenting at 11:15 a.m. tomorrow morning about using volume-weighted average price. And my friend JC Peretz has put together an incredible panel of speakers, so make sure you check that out. It begins this evening at 7 p.m. Eastern. The NASDAQ continues its run into all-time high territory, continuing to just destroy short sellers here. The people who try to pick tops, it's the most difficult job in the world, is to pick tops and bottoms. What we want to do is go along with the established trend, and the established trend remains higher here. We've seen all year, except for just a very short period of time, that the NASDAQ has been above the volume-weighted average price year to date, and we've had a rising 5-day moving average. So the intermediate term trend has been innocent till proven guilty all year. We've seen each little consolidation is broken and holds its support and then continues to move higher. So next week, for the intermediate term trend to remain consistently positive here, we want to see that it maintains a healthy slope to that 5-day moving average, and that it remains above that, making these higher highs and higher lows. If it's to pull back, even down to that level, I don't view that as a negative. It's only, something that maybe the most agile day trader would be interested in shorting. Realistically, it's probably not worth your time to try to make those types of nickel and dime moves. The Russell 2000 has been consolidating here on this monthly time frame and weekly time frame. We can see that it's been a slight downward slope to this correction, but ever so slight. And what we had seen in here was that for the daily time frame, we came down as we wanted to see a little bit of a shakeout below the rising 50-day moving average. And I was saying that although we had an intermediate term trend that was slightly lower here, we were going to give the benefit of the doubt to the buyers. They made it beyond that first level that had offered a little bit of resistance on a gap this week, and from there it continued to move higher throughout the week. Now it's interesting to see as well that the volume weighted average price year to date held as support here today, along with that rising 5-day moving average. And if you subscribe to Alpha Trends, you'll know that's exactly the level we were looking for this market to pull back to. So back to the daily time frame, very constructive action here. I think that next week we're going to want to see this level continue to hold. This is where we have the 10 and 20-day moving average, as well as the year-to-date volume-weighted average price, and that rising 5-day moving average. So I think that we can look at this market as, yes, it's in pullback mode the last couple days, and the average price since the peak here is a little bit higher. But if we can consolidate in here and start to move higher and back above those levels, then I would expect that the Russell 2000 next week we will see new all-time highs in here. Of course, that assumes that we continue to hold above 135.5. Now, the semiconductors had a strong week as well, and this group has really been, if you remember, last year was the big outperformer to the upside. Numerous people emailed me week after week saying, "Hey, you've got to, these are up too much. There's nothing there." And each time it pulled back just slightly in here, I would get you the "I told you so's," and I would consistently, steadfastly say that when we have a rising 50-day moving average, the benefit of the doubt goes to the buyers. It doesn't mean you just blindly buy, but you wait for your price levels to prove that they are in fact something that will hold, and then we look to get involved when the market is making these higher highs and higher lows at low risk entry points. And as long as we continue to hold above probably this 74 and a quarter to 74 and a half next week, I think you'll continue to see this same trend and theme play out, which is higher highs and higher lows. The biotechs made a little bit of progress this week in that, let's take a look at the numbers here. The biotechs were up on the week. That's good. We're up 3.28% year to date. They haven't felt like a bullish group. As we know, they found some resistance at this trend line just a couple weeks ago. And after that, when it broke below the volume weighted average price year to date, we've seen it underneath this 5-day moving average. Now, what we're starting to see is a little bit more constructive action, but only on the intermediate term time frame. There's really nothing to be excited about in terms of the biotechs on a longer term basis. We're still having troubles with the volume weighted average price from January of 2016. And the best case that you can really make in here is that energy is building within a stage one accumulation. But again, it's after these declines, if they don't scare you out, they'll typically wear you out, and we cannot trust rallies until we see, longer term basis, until we see the market making higher highs and higher lows above a rising 10, 20, 30, and 40-week moving average. Now, that does mean that the highs that we've seen this year will be critical to the to where we go for the rest of this year. If we can start working our way back up there, and in particular getting, what I'd like to see would be maybe to get back up above 277, 275, and spend a little bit of time in there, and then build energy for a break of that trend line. Maybe the biotechs will have a better year, but so far, it's been a very choppy environment. It's only been good for traders, obviously, but that's good news because I'm a trader. I've been talking a lot about Nvidia lately because it's been really acting great technically. Over on this date at the end of the year, I pointed out that it looks similar to Qualcomm before Qualcomm fell. A lot of people said, well, these are completely different businesses, and I agree. It's got nothing to do with the nature of what the company does. It was just a reminder that risk management is job number one, and that we were looking for it to pull back from that level down to the volume weighted average price from that previous gap. And that is the November 11th gap. Well, the stock came right down to that volume weighted average price a week and a half ago, almost precisely. And then that's when it began its bounce. Now, looking at a intermediate term time frame, let me just back this up a little bit. We've then been referencing the volume weighted average price from this gap, and that with the pattern of this stock breaking back above one, this prior resistance, and two, above that volume weighted average price, this was the point right here where the stock made a higher high above a flat to rising 5-day moving average. It had gotten beyond the average price since that pullback, and now the buyers are firmly in control of this stock. So looking to shorter term time frames, as I mentioned, my job is to provide you with the levels. You decide what time frame to get involved, and the volume weighted average price from the low and the 5-day moving average held. Now we've got higher highs and higher lows, and this is going to be what I talk about in that presentation tomorrow morning at the chart summit. So that's again at 11:15 Eastern time, and you can get details at alphatrends.net. Thank you.